This day, that year. In this case, this day last year, India and its economy were hit by a shock. At 8:15 p.m., Prime Minister Narendra Modi addressed the nation, telling us that virtually all of our currency, 86% to be precise, would be invalid overnight. He explained this as the government's attempt to hit the black economy, dent corruption, and the menace of fake currency. The year since has seen many ups and downs. Good news that the economy may not have been hurt as much as some had feared. And bad news that almost all of the cash came back, which suggests that the stock of black money may not have been extinguished. Joining us to talk us through India's demonetization experiment, and that's the best you can call it, is Professor Kenneth Rogoff, Professor of Economics at Harvard University and the author of Curse of Cash. Professor Rogoff, thanks for joining us on BloombergQuint.
Thank you for having me.
Professor Rogoff, I want to just first take you back in time a year. As somebody who understood the nuances of cash and cash in the economy, when you first heard that India had overnight decided to extinguish 86% of its currency, what was your reaction? What were your first thoughts, sir?
Well, obviously, I was quite surprised. I didn't have any word that this was going to happen. My own plan for reducing the use of cash involves doing it very slowly and not to seize the currency out there, but just to make it more difficult to use cash to do large-scale transactions. I think that can be achieved. The trouble with doing a surprise attack, as India did, is the collateral damage is so much that you can't really squeeze out the black money. You can't, you don't have the time, you don't have the people to try to sort through everything. But I must say, a year later, it's been a bigger political success than I might have imagined. And if the Prime Minister continues to capitalize on that to try to root out corruption, to try to make the Indian economy more efficient, it could end up being judged a success.
Professor Rogoff, as an economist, can you sort of explain to us how this process works through the economy? You have a sudden shock which takes away a large amount of your cash in a cash-driven or a high-cash economy like India. Typically, how would you have expected it to play out through the economy, sir?
Well, you would expect that it would hit economic activity because India, although it's moving towards more credit and it's taken some very important steps that the rest of the world hasn't in financial inclusion, in giving ordinary people debit accounts, it's not there yet. So you'd expect economic activity, particularly in the informal economy, to contract a lot. As in the event, the Indian people seem to have been incredibly creative. In fact, it reminds me somewhat of when a similar event happened in the United States in the Great Depression. Franklin Roosevelt, the new president, closed the banks when he was elected in the early 30s. And people didn't have access to cash. They didn't have access to their checking accounts. And yet the Americans, too, were very creative back then in continuing to do their business. The Indian change was even more dramatic in some ways. And it's really a surprise the damage wasn't much more.
Professor Rogoff, before I come to how the economy has responded, so, whatever, few experiments with demonetization we have seen across the world, even in India way back in the 60s, all of them seem to be driven by a very specific purpose or a very specific problem that the economy had. In some cases, it was hyperinflation, for instance, in some of the African nations. In India, one could have argued that there was no pressing need to do something like this. Would you agree with that, sir?
Well, I do think there's a very strong case to move India towards an economy where there's more financial inclusion, where credit and debit cards and telephone payments are used more. I think it would help with tax collection, especially with the new gross sales taxes. It would help with reducing crime. It would help with reducing corruption. It's a question of how. I think the lessons from India are that all in all, it should be done more slowly. But it definitely something India needs as much as anyone. But it's very hard to do overnight. This is something that takes a long time, a lot of slow, gradual changes. Perhaps, again, this is something the prime minister understands the politics much better. The drama with which he did it, although causing short-run hurt to the economy, may have helped energize some of these changes in the long run.
Could the central bank, Professor Rogoff, have taken measures at the same time that demonetization was announced to sort of dull the economic impact? Some had suggested that maybe you need to encourage, flow of credit through the informal sector to make up for that period of time where there was a shortage of cash. To your mind, is there anything that could have been done which was not done, which would have eased the economy into this process a bit more?
Well, really, by far the big thing when you do an exchange of cash is you need to have the new cash printed to exchange for the old cash. But printing currency is very technical. You don't want to make it easy to counterfeit. And so they didn't have a big supply, a nearly sufficient supply of cash on hand. That was not the central bank's fault. That was a decision that the government made. They didn't want word to leak out that they were printing money. But the big problem that India experienced in doing it so fast, by far the major problem, was they didn't have new cash printed to replace the old cash. Once that took place, things were a lot calmer.
Professor Rogoff, a year later, we now know one thing, which is that 99% of the cash came back. To you, what does that suggest? And then I'll tell you what the discourse here is. But to you, what does that suggest that all the money that was extinguished has come back into the banking system?
I think that was very hard to avoid, because the problem is when you're doing something so dramatic that affects the economy so much, there's collateral damage going on all over. So in the end, the government isn't able to tediously check everyone as they bring cash back. That part of it's just not realistic. The real object should be to try to restrict the use of cash in the future, to make it more difficult to buy a house or an apartment, to make it more difficult to avoid taxes. And I think this is a step in sort of shaking things up, making people know that the government's committed to trying to restrict the use of cash. But I think the idea that you would be able to seize the black money is too optimistic. It is an old idea. An American, James Henry, who advocated this kind of idea in the mid-'70s, suggested exactly that, to do for the United States, to do things the way India did. In my book, I think that just won't work, and I recommend going very slowly. So I don't regard that in itself as a huge defeat, although, of course, from a public relations point of view, if the government had said they would accomplish that, it is. They say they will still be able to identify bank accounts. They'll still be able to root out some of the black money that found its way into the banking system. I don't know the technical details of that.
Professor Rogoff, what they are attempting to do now is, the income tax department seems to be scrutinizing a lot of the cash accounts, etc., to see whether some of this money can, be weeded out. Would you advise against that? It seems like some would fear it's becoming a bit of a hunt for a needle in a haystack, which you, lost somewhere along the way.
Well, I simply don't know the technical details. It's probably helpful in the extent that you want to discourage this kind of activity in the future. You want to make people more nervous about doing big transactions in cash, make them worry what might happen in the future. So perhaps from a long run sense, it's helpful. But again, I don't know the details. It's very hard to do this in a detached, balanced way. There are places I know in other emerging markets which have had some success in looking at transactions and looking at, how money is flowing in and out of the banking sector. So perhaps India will as well.
Professor Rogoff, you talked about, the longer run objective being to sort of reduce the use of cash in the economy, not just the stock, but also the flow. So now we've seen a scenario where a bunch of sort of digital payment options have been launched. We have not gotten to a point where you've made digital transactions much cheaper or, perhaps more easily accessible beyond a point. There were some suggestions that you need to bring in a banking cash transaction tax if you want to actually reduce the use of cash. But there was a pushback against that. To your mind, what's a better route to go? Make digital cash use easier, or to disincentivize the use of physical cash through things like taxation, etc.?
So I think you have to mainly improve people's options, improve financial inclusiveness. I could imagine having some kind of tax for very large bank deposits in cash. That would be a small step. But I think the main thing is improving people's options. And again, India has gone far beyond many other emerging markets in the Aadhaar system in providing people in principle access to debit cards and credit cards. That was done initially under the Congress Party, but I think Prime Minister Modi has advanced that quite a bit. There's obviously some civil liberties issues surrounding that with the biometric information the government collects. But by and large, I think India is at the cutting edge, and many other countries will follow what India is doing. But it takes time. This isn't something you can do overnight.
One of the good things, Professor Rogoff, has happened, some would argue, is that very soon after this demonetization, we implemented the goods and services tax in terms of curbing the flow of black money. So, you tried to attack the stock of black money and then curbing the flow of black money. Perhaps that taxation reform will go a long way, would you say?
Absolutely. I mean, the goods and services tax is a phenomenal change in India's federalism. It's really a new pact between the states, and it offers the finance ministry many more ways to try to root out tax evaders and to root out corruption. It's a big step. And they argue, the finance ministry, the central bank, argues that the demonetization will work in cooperation with the new GST tax. Again, I don't know all the details, but we have to remember there have been many, many dramatic changes that India has made in recent years towards modernizing its financial system, towards trying to reduce the size of the informal economy. And I think by and large, these are going to provide an anchor for India to grow faster in the future. The International Monetary Fund, in its recent report, the New World Economic Outlook, highlighted that, yes, there's been somewhat more of a slowdown in the economy in 2017 than anticipated, but they expect the changes in these policies to really help over the longer term and to raise India's longer term growth trajectory.
Professor Rogoff, on the flip side, there is a view, and Raghuram Rajan, our former central bank governor, who's now back in the States with you all in the academic fraternity, said that, you have to be careful about transitioning the economy from a large informal segment towards the formal segment, because you will see a lot of businesses not being able to tackle that transition into the formal sector, and that could lead to supply shocks in the economy. Do you think that that's something that needs to be watched out for? Are there, to your mind, any measures one can take along this journey to, again, smoothen out the transition from informal to formal?
I think the main point is you need a very slow process over, a decade or two. It's not something you can do quickly, but it's going to happen simply because the transactions technology is changing so fast. It's improving so much. There are countries like South Africa, Kenya, which use mobile payments more than in the United States, where they're transitioning out of a cash economy very rapidly. But it's something you want to do largely with the carrot, not the stick, as much as possible, giving people other options, giving them attractive other ways to do transactions. But you just can't do it overnight. It has to take a long time. People have to be able to make adjustments, and businesses. But they will. I mean, I think there's little question that if we look 20 years ahead, India will not be a cash-driven economy. It will have changed. The question's how to get there.
Professor Rogoff, on the cash side, the one sort of question that remains unanswered is why we have this cute currency system where we have 100 rupee notes, 500 rupee notes, and then we have a very high denomination 2000 rupee note. And I think in your book you talk about the fact that the idea is to bring down the denomination. So we haven't really managed to do that.
No, I must say the large denomination notes in India were not that large to start with. So the largest note at the time of the demonetization was only $15. My book talks about, getting rid of bills, $50 and $100 bills, maybe in 10 years, $20 bills. So yes, India's gone in its own direction. But on the other hand, I do think it has sent a shockwave through the system. People are more concerned about using cash. But no, India's followed its own blueprint in this. It's not been done in a way that really others have tried or necessarily recommended.
A couple more questions, Professor Rogoff. One is, we have seen since demonetization an increase in digital transactions. We have also seen greater flow into financial assets. Now, the question there is whether this was a one-time impact, both on digital and particularly on the flow of money into financial assets, because, money came into bank deposits and that seems to have gone into financial assets. There's nothing to suggest to us that behavior has changed, that cash usage has reduced, or that the propensity to go towards physical asset investments has reduced. But I guess it would be too soon to make that judgment. Would you say the judgment would take perhaps at least a couple of years?
Yeah, I think it'd be a few years, 3 years, say, before we really have any idea of how this has gone. There are many other long-term trends taking place. But no, people don't change their habits overnight. This has shaken up the system. It's had a psychological impact, but it's not going to that rapidly accelerate things. On the other hand, the government has a lot of measures like the new gross service, the new sales tax that it's put in place that will affect things. But no, things don't change overnight.
So then a last question, Professor Rogoff. At this 1-year milestone, how would you describe India's demonetization experiment?
I would describe it as part of a larger program of changes to try to modernize the Indian economy, to try to reduce the size of the informal sector, and to try to create a greater federal India that are going to be a success and plant India on a stronger growth path. I don't think other countries are going to imitate the exact way that demonetization was done in India. There's some lessons to be learned, despite the fact that, from what I can see from a distance, it's been quite a political success.
Would you hold on to your view that don't try this at home, emerging markets, which was one of the first comments you made after this was announced?
Yeah, that is what I say in my book. I recommend this as a policy for advanced countries first, emerging markets to be careful, although I've had pushback from a number of political leaders in emerging markets who tell me the corruption problem in emerging markets is much, much greater than in advanced countries, and finding ways to fight corruption is absolutely at the top of the list. And you shouldn't underestimate the importance of reducing cash usage for emerging markets also.
All right, Professor Rogoff, perhaps the view on this will continue to evolve as time passes. Thank you so much, Professor Kenneth Rogoff, for speaking to BloombergQuint.
Thank you for having me.